Okay, what are you saying, people, and welcome back to another video. Now today I'm talking about how to identify and spot continuations in the market. So a lot of people get stuck between figuring out if the market is about to reverse or as it can continue in its trend. So it's a key concept that I'm going to speak about today. I want to show you 3 different ways you can spot these continuations and then apply them to your trading. So make sure you stay through the whole video. I'm going to show you all 3 examples, explain how they work, and also show you some real life examples in the market as well. So let me stop talking and let's get into the video. Okay, so welcome to the charts, people. So I'm going to show you the 3 different types of chart patterns that will help identify continuations in these markets. So the first one is a really good pattern when you're coming up against a really strong level of resistance or support. So say, for example, we've got a really strong resistance here in the market and we've got an uptrend coming into that level. So you're now trying to work out whether price is going to reverse at this resistance or break through and just can see a continuation of that trend. So say we've got a bullish trend here in the market, higher highs, higher lows. We see a push into that level, we see some rejection, then we see another push back into that level, more rejection, back into that level, more rejection, back into that level. And this type of pattern here is a really strong continuation pattern, and it normally tells us that we're going to see a break through that resistance. As you can see here in the market, we're always getting those higher lows in the market. So there's a higher low, higher low, higher low, higher low. You can see we haven't actually broken through that resistance, but price is still managing to creep higher and continue giving us those higher lows. So this gives us a bit of a pattern between this trend line, which is giving us the higher lows, and that resistance, that major resistance that we've identified. So it just depends which way price wants to break out of this trap. So either break through the resistance or break through the trend line. Most of the time you normally see price break through the resistance and you normally see a continuation of that bullish trend, or if it's the other way around, you normally see a continuation of the bearish trend. If you do see a break of the trend line, however, that will probably indicate either a false breakout or a reversal, and you start to see the market give you lower lows and start to see actual bearish trend in the market. But as long as we stay above that trend line, which most of the time we normally do, we normally see a nice breakout to the upside, and normally it is quite explosive. The next pattern I'm going to show you guys today is another very strong continuation pattern, and it's actually very simple. Maybe some of you guys already know of the pattern already, but again, very effective when used properly. So say we have an uptrend here in the market, we see correction, another push to the upside, another pullback, push to the upside, pullback, push to the upside. So this here is a very basic, simple uptrend in the market, and simply just using counter trend lines and trading counter trend line breaks can be a really good pattern to trade for continuations in the market. So obviously you can see, if I just remove that trend line, actually you can see the trend of this market is to the upside. Price is giving us higher highs, higher lows. You can see the trend line is also pointing to the upside. So now we give ourselves these counter trend lines, which again go opposite to the trend. And normally when we see a break of these counter trend lines, it normally signals to us that the trend is going to continue, and we'll see another impulsive move to the upside. So break of that trend line, impulsive move to the upside, break of that trend line, impulsive move to the upside, break of that trend line, impulsive move to the upside. So very simple pattern, but normally when used correctly, it can be very effective. And normally when you trade this, you can be aiming just above those highs, or again to the previous resistance where the trend line started. But again, very effective pattern. Again, can be subjected to false breakouts because again, all trend lines are not going to be 100%. You can easily get false breakouts, but the majority of the time when you see that a nice strong break of a counter trend line, it normally does mean that you can see a continuation of that overall trend. And the third and final pattern we're going to look at is double tops, triple tops, double bottoms, triple bottoms. So they're all essentially the same thing, price failing to break through a resistance or support, testing numerous times before reversing. And a lot of people look at double tops, triple tops, double bottoms, triple bottoms as only a reversal pattern, but it's actually a very strong continuation pattern as well, since again you're trading with the momentum of the market. So again, it has a high probability of actually working these double tops and these double bottoms, simply because you're trading in the direction of the trend. So say we have a bullish trend here in the market, push to the upside, pull back, push to the upside, pull back, another push, price fails to break through that top there, comes back down, retests this same area here where we previously found support, and then we continue to the upside from here, because again we had that double bottom, price failed to break through that support, gave us some strong impulsive candles, then we look to continue that to the upside, even though we did have a double top here. But again, we are trading with the direction of the trend, and as long as price is showing you that we're failing to break through this low, again you can easily have a nice double bottom there, or again you can have a double top, which is the reverse of what I just showed you. So if you have a downtrend here, high low, high, well, lower low, lower high, lower low, lower high, come back in, find resistance back at that level, and then we see the continuation to the downside, giving us a nice double top at that area. So 3 really strong patterns here: double tops, double bottoms, or maybe triple tops or triple bottoms. These patterns here for break of counter trend lines, very, very strong as well. And obviously this pattern as well, when we get those higher lows or lower highs into that strong resistance or support, we normally do see nice impulsive breaks through that resistance or through that support. Okay, so now I've shown you the textbook examples of these patterns. Now I'm going to show you some real life examples and also how to use them to your advantage in the real life markets. Right, okay, so on my screen now we have AUD/JPY here on the daily time frame, and as you can see here, we have a really nice strong bullish trend here in the market, and here is a really good example of the first chart pattern that I explained to you earlier on in the video. So if I just press the replay button of this market here, so you can see we do have a really key resistance here in the market. So very key resistance that a lot of people will be looking to sell this market, and after a very, very strong push to the upside, you can see you had a very strong push back down again. So it is a very, very strong level in the market. You can see very nice push to the downside. You can see we tested it again recently as well, and a very strong move to the downside again. So we've established as a strong level of resistance, and it could potentially hold and see a reversal of this bullish trend in the market. But as you can see, that there is one key sign that is telling us that we're actually going to break through this resistance and see a continuation to the upside of this trend, and just see an overall continuation of the uptrend in the market. So you can see here a very, very clear push to the upside in the market, and we're always keeping those higher lows. So again, higher low, finding that support, higher low, finding that support, higher low, finding that support, higher low, finding that support. The market's continuously pushing to the upside, not backing away from that resistance, giving us higher lows, higher areas in the market where people will look to buy from, saying that, yeah, we're going to break through this resistance and see a continuation of the trend. And as you can see, we eventually get a nice breakout to the upside. Obviously price eventually comes right back down because it was a bit of a false breakout, but we did see that continuation to the upside, which is what we're looking to trade here. We're looking to find indications in the markets, chart patterns in the market that give a nice strong sign to us, saying that, yeah, this trend in the market, this uptrend or this downtrend is very, very likely to continue in its direction. And the fact that we're getting those higher lows in the market is a very strong indication to us that we'll see a breakthrough of this resistance, and the overall bullish trend to the upside was very, very likely to continue. Okay, so now we've got Euro AUD on the hourly time frame. I'm just going to show you how powerful trendline breaks are, counter trendline breaks are, and then expecting to see a nice continuation after that break. So you can see here clear bearish trend in the market, lower highs, lower lows, and you're seeing really strong pushes to the downside here. So you can see here in the market already a really nice trend line here in the market, keeping us to the upside. You can see which way we're trading, impulsive leg here. Then you can see we're moving very, very corrective, struggling to make those higher highs. So this is obviously telling us this is the counter trend move. And then once we had that counter trend break, we had a retest of that, fell to the downside, price came back up to retest this resistance here. So this is probably another indication of that the continuation will happen because of our third pattern that we had. Remember, double tops, double bottoms, test that resistance once, test it twice, and then fell to the downside. As you can see, a really nice impulsive leg, and it eventually got us a move all the way to around this low here. So you can see how very powerful that is. You know, if you got in at the top here, you're looking at a nice 130 pip move to the downside. So very, very powerful, and that's only, again, the hourly time frame as well. So once you be able to read them, and also combining the patterns as well, so like I said earlier, the double top plus the counter trend line break, you know, the odds are in your favor, and then you see a really nice continuation to the downside. And also if you look here, we also had another counter trend line break here as well. So there's a nice trend line, break of that trend line, saw a really nice impulsive move to the downside, and again here as well, really nice trend line to the upside, break to the downside, break through the trend line, and we see another impulsive leg. So counter trend line breaks, as simple as they are very, very effective when used correctly. And now we're on GBP USD on the H4 time frame, and now I'm just going to show you the third pattern that I showed you earlier on, the double bottoms, the triple bottoms, double tops, triple tops pattern that I'm showing you now, and showing you how it identifies that the trend will continue. So you can see here, bearish price action here, we had a bearish trend in the market, then we reverse, and now we're trading in a bullish trend here. And you can see here we do have a really key level here of support here in the market. So again, you can see this is kind of a previous swing low in the market, push to the upside, retrace, push to the upside, retrace, push to the upside, retrace. You can see we're failing to break through this level here. So this is not exactly a double top or a double bottom, because you can see we actually tested this area once, twice, third time, fourth time, and a fifth time before we continue to the upside. But it's the principle that is happening here. You can see we're failing to break that key level in the market. We've tested it numerous times, and the fact that price is failing to break through the level is already telling you that, hey, this trend wants to continue. Price is failing to get lower. The bearish pressure is not strong enough to take out that really strong support, and normally in an uptrend you expect the support to hold and the resistance to break. And if that support is holding, whether you're getting a double bottom, a triple bottom, or in this case 5 tests of that support, and price is showing you it's holding, you normally do get continuation of that bullish trend. So you can see here we held that level and a really nice push to the upside, again very, very big push actually. And then here you've got another example. So we've got we've got a nice push to the upside, previous low here, really key support, create a new high there, bit of a false breakout there. But you can see multiple tests of this same level, test there, second, third, fourth, fifth test, and then we take off to the upside. So it's not exactly a double bottom or a triple bottom, but it's just the principle of failing to break through key supports, holding, then expecting to see a continuation after that. And then again, we happened here again, a really nice push to the upside. Here you can see this is kind of similar to the example that I showed you when I drew it out. You can see you have a double top there, price tested the resistance, failed to break through it, tested again, failed to break through it. But you can see we failed to break through this key support here in the market. So really nice support here, tested it once, gave us a swing to the upside, tested it again, another swing to the upside, giving us the double top. But you can see we failed to really break through this area of support, tested it once there, second, third, and then we took off to the upside. So it's the key principle of failing to break through those key supports in those uptrends. If you're getting a double bottom or triple bottom, or in the reverse, a double top, triple top, or testing it 4 or 5 times, just showing you that sign that we're failing to break through those key areas normally indicates that the trend will continue. As you can see, you had a really nice push to the upside, then you can see here we're just breaking through levels here. So this is kind of like the last key level there, nice area of support. If we did hold that level, we'd probably see a nice continuation to the upside, broke below it, retested the resistance, and as you can see we had a really strong bearish trend to the downside there for GBPUSD. So it's the key principle of holding those areas, which it identifies to us whether the trend will continue or it will actually reverse. Okay, so that is the end of the video. I hope you all enjoyed it and found it useful. If you have any questions or you want me to explain something in a bit more detail, make sure you just leave a comment down below and I will get back to you. But thanks again for watching, and until the next one, I will see you guys later.